Hello and welcome to another wholesaling video from wholesaledealmatcher.com. My name is Don, and one of the things that we want to discuss today is why do short sales take so long to complete? Many wholesalers throughout the nation are just mind-boggled by the amount of time that is wasted and the amount of effort that is utilized in order to be able to get these things to go through. Why do they take so long? Well, let's go through a few things to help you understand a little bit more clearly as to the reasons why they do take so long. One of the things we want to start off with is helping you understand when would banks consider a short sale. There's certain, I guess you could say, elements or pieces or processes that have to be in place, conditions have to be in place to be able to allow them to even consider moving forward with a short sale, or even reviewing offers in that direction. So one of the big things is that the borrower has to owe more than the property's worth. And there's a lot of people nationwide that are experiencing this, and so this is one thing that a lot of people easily do qualify. One thing that a lot of people don't realize is that they have to be delinquent for at least 90 days, meaning that they have not made a payment or even a partial payment for at least 90 days, 90 consecutive days. So it's not going to be 1 month paid, not the next month not paid, and then another month not to be paying. What they're looking for is 90 consecutive days of delinquency. Also, they're going to take a look at the portfolio of non-performing notes in the surrounding area, and so they're going to see, based off of their bank's portfolio, how many notes do they have that are not being paid on. Is this a situation where they are going to have a backfill of a whole bunch of foreclosures coming on the market in the next little bit, and would it be in their best interest to get rid of this particular one, and sell it short of what is owed prior to the actual foreclosure taking place, and them have to hold on to that property for any period of time. Also, in a lot of cases, if they're a smaller lender, they're going to be more interested, a lot faster, a lot easier than what some of the bigger banks will. They also will be able to move a heck of a lot faster. Same thing also goes for the banks, as well as also the credit unions, or even a private investor, a private lender who has carried back financing on a particular property might consider a short sale a little bit more readily than somebody else would. Now, there are certain things that a bank's going to require to even take into consideration the short sale offer. There needs to be a signed authorization to release information that is basically going to have all parties that have signed the original note itself, as far as the borrower's side, to have signed that. They're going to have to fill in their information. They're going to have their name. They're going to have the loan number for that particular loan that you are looking to offer a short sale on, as well as also Social Security numbers. And it basically states that you as an investor on their behalf can act and help to negotiate and navigate through this process and to be able to communicate with the bank. If this crucial piece of information is not offered, the bank will not talk to you. They need to have the authorization from the borrowers, because technically the borrowers are the only ones that are allowed to call on their loan and find out what's going on with it. They're the only ones that would be allowed to do so without this crucial piece of information. Also, you are going to need to have this information to submit to them as well when you go to request a short sale packet, or even if they will consider a short sale, because not all banks are going to at the one particular time or another, or lenders are going to consider even looking to do a short sale. That might not be a policy that they typically include. So it depends as to what's going on. So typically what we'll do is we'll get this authorization signed. We will go ahead and contact the bank, send it over, and then we will start to discuss with them what the process would be for whether they would look to consider a short sale. Now, if they're going to do so, they will go ahead and give you some itemized information as to what that short sale packet's going to consist of for them to even being able to consider it. In most cases, they're also going to request a broker price opinion. So basically, a real estate agent in the area is going to utilize comps, sold comparables for like properties in that neighborhood, and come up with a value amount, as well as also most banks right now these days are going after appraisals. So between those two, they're going to come up with a dollar amount as to what the property's worth. And from there, they'll go ahead and decide whether they're going to consider going ahead and foreclose, or whether they might consider a short sale. And if they do consider a short sale, as to how much they might be willing to accept for that short sale offer. Also, in a lot of areas, there is an affidavit for an arm's length transaction, meaning that the individual who is the borrower is not asking a friend, relative, or somebody else like that to work on their behalf to try to negotiate this on the back end. So you'll have to complete that short sale packet and then go ahead and submit that short sale packet to the bank, and then it is just a waiting game. In a lot of cases, the things that take the time is the broker price opinion, or BPO, as it's typically called for an abbreviation, and also the appraisal. Once those things are approved, they have reviewed all the documentation I'm going to go through in just a second, then they'll go ahead and they will give back an approval, a counter offer, or blatant rejection of being able to move forward with a short sale. So those are some of the reasons why some of those things take a little while. Well, the gathering of the paperwork that's included within this short sale package is the thing that takes a lot of time for a lot of people to put together. In fact, the reason why is because we're dealing with the borrowers, the sellers that are in distress. For them to actually go back through and look through their financial situations, and for them to be able to gather all this information, a lot of cases takes a little while. Typically, most short sale packages on average have some of the following things. There's going to be a cover letter. Just basically, this cover letter is going to address or identify some of the reasons why the short sale is being requested and what the conditions and circumstances are. Then, obviously, that authorization or release information is included in with this official package. The seller is going to have to offer a hardship letter. What was the circumstances by which they are having a hardship? Why are they not able to make their payments for the last 90 days? Was it due to unemployment? Was it due to medical expenses, unforeseen physical harm, or a major accident? Was it due to death of someone? Was it due to natural disaster? What is the exact circumstances under which now they are experiencing difficulty? Also information about their financial situation. So they will need to basically outline where they are financially, amount of debts that they have, that they owe, as well as also the amount of money that they do have coming in. 2 years worth of W-2s, so they want to see how drastically it has changed. 2 months of pay stubs, because they want to see what kind of money they have coming in, from what sources. Did it go from regular everyday pay, a week-to-week paycheck, or did it go to more seasonal or commission-based, and how is that affecting the people's circumstances to be able to afford to maintain this home and be able to make their mortgage payment? And then also 2 months of bank statements. Do they constantly have negative balances? Do they have a zero balance? Do they have any money sitting in there? Those types of things will be able to help prove their case. And then also supporting hardship information, such as, if there's an HOA lien currently against it, the property, medical billings and or specific statements for disability. Those types of things would also need to be included within that short sale packet. A repair estimate for the property is something that we, as the investor, we're going to come up with. We're going to make the thing look really, really bad. In a lot of cases, we're also going to take pictures of the respective issues with the property, repairs that are necessary to be able to get the thing back up and ready and livable condition, I guess you could say, if we want to go even that far to say that. Comparable sales for the property, that's something our agent can do, and typically we want them to show the other foreclosures and short sales, basically the other cash properties. The properties that have purchased recently for cash within the last 60, 90 days is what we want to show, as well as also the contract, basically the purchase agreement as to what we are proposing to offer to this, to these sellers. We need to have that signed by us as well as also by the seller, and then that's going to be submitted to the lenders, and the lenders will then decide whether they have offered approval or not. A net sheet will be important as well. First mortgage holders may ask for a payoff amount from the second mortgage holder might ask for that of the first, so it depends on how many mortgages are currently against them, that property. The lenders might ask for an initial title report just to see what other liens might potentially be against it, such as IRS, tax liens, any other types of judgments, divorce decree type judgments, stuff like that might be an issue. And then also FHA and VA may have their own forms and special requirements that they're going to require as well. In fact, a lot of cases they're going to require that the people go through credit counseling. They're going to require that they have listed the property for at least 90 days. They're going to go back through and make sure that there was an opportunity to be able to try for a loan modification, or other loan options have been exhausted, such as maybe an extension, or the HARP program has been utilized and tried. In a lot of cases, too, they're going to even go back into the paperwork and see whether this loan was created based off of the insuring agency's criteria during that period of time. What I mean by insuring agency is going to be FHA, VA, Fannie Mae, and or Freddie Mac. These agencies back in the highlight and heydays of the business back between 2000 all the way up to middle of 2007, what they were doing is they were giving incentives to the lenders to be able to make higher risk loans. And the reason why they're willing to do that is because FHA, VA, Fannie, and Freddie were willing to take these higher risk debts or loans over if they ended up failing. Well, the thing is, the market crashed, and now they ended up basically eating crow for what they put out there, because they did get a little bit creative and actually got some people into properties that there's a good chance that they should not have been brought into that property. So they are looking at now, was the loans created with their respective criteria, because they did have specific criteria, but there was a lot of individuals within the industry that were creating loans that really should not have been creating these types of loans and saying that it would be insured by FHA, VA, Fannie, or Freddie. And so that's another set of criteria that a lot of people are not aware of, that these insuring agencies are gonna want to look at before they will go ahead and say, yeah, you can go ahead, Mr. Banker, and accept a short sale, or go ahead and even pursue foreclosure at the end. So these are some things that need to be exhausted and utilized and done and completed before they can go ahead and even consider looking at considering a short sale, let alone even a foreclosure. So those are some of the main reasons why short sales do take as long as they do, just simply from the time standpoint of the variety of different documents that are required, moving pieces. What you'll also find is if there's different lenders that are involved within the transaction, meaning that there's different lien holders against the property, if the person's has recently filed bankruptcy, if it's a situation where it's a divorce decree situation, if it's a probate or estate situation, if there's back taxes that are owed to the county, or if there's back taxes owed to the IRS, all of those pieces can add additional time onto the process of trying to complete and be able to execute a short sale and finally get approval for the short sale. So keep those things in mind. That's the reason why, typically, just a little tip and pointer as to what I do. I wait till somebody else has already gotten the price approved. Then we go ahead and strike. Typically, in most areas, you have about 30 to about 60 days from the point in which they accepted or they put out a specific dollar amount, that they will allow that documentation that was originally pushed through by that other party to stand. So at that point in time, you could go ahead and submit another offer without having to go through the whole documentation approval process, as well as also waiting for them to do another BPO and also an appraisal. So just some more pointers and tips from wholesaledealmatcher.com. This is Dawn. If you'd like to learn a little bit more about wholesaling, as well as also having an opportunity to be able to post your wholesale properties for free, please feel free to join us at wholesaledealmatcher.com. Thank you, and until we talk again, have a great day.